Good morning, Big Square. Road2road.com with your morning horn of Z's, your sip of coffee. Um, yeah, it's happening. It is happening. Um, we have $1.2 quadrillion worth of derivatives that were notional, meaning so far out of the money, no one would ever trigger those. Nothing could ever trigger that. To this is a reality. This will destroy everything. This is the end game. So over the weekend, we had a terrorist attack which nobody knows quite where and how and who did it and how, on a Saudi oil facility. Chaos in the oil markets. Those who have followed the road to Ruta know oil is such an important commodity. It was so important we linked the dollar to it in the 70s, requiring the whole world to buy oil in US dollars only, creating artificial demand for their oil. It's called a petrodollar. Well, the bad guys in all their brilliance controlled the oil market via derivatives. The best estimate is 1.2 quadrillion in oil derivatives. 1.2 quadrillion. Yes, insane, but you needed that to control the unbacked fiat system. So throwing a little bomb literally into the oil pricing is going to turn a lot of these notional derivative contracts. Say, I bet in 3 months the price of oil is going to be $300. Random bets. They're real cheap bets to make. But if it ever comes true, it's multi-billion-dollar payout of whoever wrote that contract. You might start asking yourself, wait a minute, wasn't it JP Morgan and Deutsche Bank that are increasing their derivatives massively? What did they know? Who did they know? Were they the ones guaranteeing these gigantic bets in oil, or were they the ones making the bets in oil? Nobody really knows. But it's 1.2 quadrillion. And did Ruta get it right? September 11th? In that range? You tell me. Go back to part 1 of Ruta's timeline, which I posted, I think it was in May. Flip right ahead to the place where I talk about oil and oil derivatives. Go I swear to God, I've posted this in public, part 1 of Ruta's timeline. And what did I say about the September 2008? Remember, nobody knew everything went sideways on September 11th. It wasn't until 2 or 3 weeks later. Actually, it was till the Monday later when Lehman Brothers went down. Now, if it's true and these oil derivatives are going sideways, I'm going to go through this on the private road and on Patreon. Join the private road and Patreon. But there's a date when the contracts come due, so we'll get into that there. Also, in the Road to Ruta documents, there was the third document posted the very same day as the Wishes and Rainbows comic, as the Road to Ruta Teacher's Guide, and the third document was the Banking Basics Guide. And they talk about Gusher National Bank. You can't make this stuff up. I'm just saying, I'm going to talk about that on the private road and on Patreon. So please join. Anyway, so a few months back, I'm saying, when's the most likely time frame? There was the 3% chance on September 11th. There's a 1% chance today. There's a 1% chance tomorrow. I would say going forward, over the next week, it'll turn into 2%, 3%, 4%, 5%, depending on what happens. Now let's take a look at what is happening. Saudi oil attack roils global energy market. Trump said locked and loaded to go to war with Iran. Trump knows. It's not about the oil. It's not about energy. It's about the derivative. 100%. Houthis say it's not over. Saudi oil still within range. Iraq denies its territory was used. While U.S. officials were quick out of the gate to allege Iranian attack on Saudi Aramco facilities launched from Iraq early Saturday, a theory which the Wall Street Journal said was focus of ongoing U.S.-Saudi investigation, Iraq's government issued a firm denial on Sunday, which followed Iran's own denial that condemned Washington's maximum lies. saying there was no link to Saudi soil, and the attack which caused oil prices to spike to record levels the moment markets opened, initially surging to as much as 18% before retreating, after Donald Trump authorized use of Strategic Petroleum Reserve, the SPR, to keep the markets well supplied. The Iraqi government further vowed to punish anyone who intended to use Iraq as a launchpad for attacks on the region. It is ugly. It is more than ugly. But this is all part of the plan. It's scary. Yes, it is scary. Absolutely. And if Trump does declare war, right here, Iran war imminent, Trump says he's locked and loaded to respond to Saudi attacks. There's going to be a lot of issues. A lot of issues. Could all 1.2 quadrillion in derivatives in oil become real, from notional to real? I'll be talking about that all week on the private road and on Patreon. So join, please join. It's going to be big. Crazy big. Oil explodes 20% higher, biggest jump on record ever. Do you think the derivative market likes volatility? It depends which side you're on. Those out of the money derivatives, when they come in the money, it was so cheap to buy, say, $100 oil derivatives, and that would expire in 2 months. No way that would ever pay off. So it was almost free. And who was on the other side of that derivative market? Somebody guaranteed that stuff. What kind of companies did that? JP Morgan, Deutsche Bank, the gang. Because they got money up front. And they needed money up front, so they'd make crazy bets. And keep an eye on Warren Buffett. Eyes and ears on Warren Buffett. I told you for how long now that Buffett was working with the good guys. Keep an eye on Warren Buffett and listen for what he says. It's crazy. It's going to get crazier as we get closer and closer to contract expiration. Keep an eye on it. And by the way, let's just listen to what I said in reading this thing. This was 3 months ago. Listen to this. U.S. maximum pressure on Iran will inevitably be met by maximum counterpressure. Sparks are ominously bound to fly. For the past few days, intelligence circles across Eurasia have been prodding Tehran to consider a quite straightforward scenario. There would be no need to shut down the Strait of Hormuz if Quds Force Commander General Qasem Soleimani, the ultimate Pentagon Benatoire, explained in detail on the global media that Washington simply does not have the military capacity to keep the strait open. As I previously reported, shutting down the Strait of Hormuz would destroy the American economy by detonating a $1.2 quadrillion derivative market that would collapse the world banking system, crushing the world's 80 trillion GDP and causing an unprecedented depression. 3 months ago, I was saying that. And now it's happening right around when I said I would. No, I didn't have a crystal ball back then. Everybody thought, oh, everything's fine, Bix. What are you talking about? Things aren't fine. Things are under a plan. This is a planned implosion. The creation of the derivative monster was a planned thing by Alan Greenspan in the late 1990s, knowing it's almost impossible to get rid of these people that Dick Allgaier talks about, the criminals that control our world. So we said, okay, let's do this. Let's make derivatives an unregulated market. Let the bankers give them enough rope to hang themselves. They will. It is a guaranteed thing. They blew up that bubble so big, nothing can survive it. And that's where we are now. It's that easy to take down these bad guys. Because they're greedy bastards. And nobody knows what's going on, right? Liquidity dies in darkness. Trillions in assets have no financial disclosure to support them. Dick and I talked about this. The fake shares that are traded every day on these exchanges, and not just the cryptos. It is the bond market, the stock market, the commodity markets. It is all a Ponzi scheme, a game. It's all imploding. While there has been extensive discussion of the passive ETF index fund bubble, most recently Michael Big Short Burry, who recently joined the parade of skeptics warning of the impact and implicit dangers the passive investing bubble carries with it, perhaps the most interesting angle of the ETF stampede into fixed income securities, which includes junk bonds and leveraged loans, in addition to the recent frenzy for investment grade debt, is the fact that a substantial portion of it now trades with virtually no fundamental information. In other words, assets are being bought, if not so much sold, simply to accommodate the flood of investor money with no regard to actual financial data or corporate net flow. It is the highlights in a recent note of TCW's Chief Investment Officer of Fixed Income, Tad Revell, who currently manages some $170 billion of AUM, who writes that as a result of the above, quote, not only have the debt markets ballooned in size, but the growth has become disproportionately from those segments of the debt market where financial disclosure is poor. What could possibly go wrong? And those saying, "Oh yeah, we're going to fix the Saudi facility, the processing facility. Oh yeah, we're going to fix it, no problem." It wasn't just one drone with one bomb. These were targeted attacks in the most important parts of this facility. And here we go. And there it is, moments before the markets opened, upon the U.S. release of declassified satellite images showing precision strikes on critical spheroids at the world's largest oil processing facility. One market analyst alarmingly writes, quote, "We think this is a month's fix, not days or weeks. Oil's going up even higher." And then right after that, Trump comes out and says, "We're going to go to war with Iraq. We're locked and loaded." Again, these bad guys are hard to take out, but they are not invincible. You put a little monkey wrench into the wheels of a $1.2 quadrillion oil market, voila. You got a recipe for destroying everything. Goldman goes, Lehman weekend on oil, expects chaos when trading opens. Exactly 11 years to the day since traders organized an emergency impromptu CDS unwind session on Sunday afternoon ahead of Lehman's shocking September 15, 2008 bankruptcy filing. Major banks are preparing for similar Sunday chaos. Only this time in the crude oil market in the aftermath of Saturday's shocking drone attack on the most important facility in Saudi Arabia, which may result in a production shortfall of millions of barrels per day that stretches for days, if not weeks, and lead to an explosion in oil prices. For those who are reading this early on Sunday afternoon, gas up your car now before the price of gasoline surges on Mondays. First, we present the email that was just sent out by Saxton's Christopher Dimmick, indicating that when Brent opens, it will surge as much as $5 to $10 on the Asian session. The bottom line, oil may spike much more if the return to normal production takes longer than expected. Sure enough, that is the main point conveyed in this email that was blasted out by Goldman Sales to the bank's top clients around the world. The message was simple. Expect chaos when oil markets open and sharply higher prices. So there we go. It's going to be a long week. I'm going to be talking about this a lot. Not only what happens, there will be probably more terrorist attacks on oil. If any kind of shooting starts between the U.S. and Iran, you can expect the point of Hormuz to stop. And voila, game over. And there's a time date for this contract and the next contracts, and the larger contracts. So keep an eye on Road to Ruta. Join the Patreon. Join the private road, and read for you private road members. I posted parts 1 and 2 of my timeline in the regular. Hang on a second. On the regular Road to Ruta, open for everybody. Go check those out. and I'll give you the way I think about this stuff. For private road members and Patreon members, we got updates 1, 2, 3, 4, and 5. Go rewatch those again and again and again. And then I'm ready for update 6 later today. Will be posted. So keep an eye on it. It's going to go over banking basics and what Ruta was telling us back then. The insanity is the original Road to Ruta stuff was written in 1981. This is a long-term plan. So that's it. That's all I got for you. Crazy days. Hang on tight. BigSwear, roadtoruta.com. I'll talk to you later.